Hey everyone, John Hunter here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasons behind the moves today so we can better understand tomorrow. This time around, we're going to be taking a look at crude oil, and crude oil started off pretty darn slow, but we finally got a good breakout move to the downside going into the afternoon, going into lunchtime, and they really didn't let up the steam until going on 12:30. So first of all, taking a look at what happened yesterday, we had kind of a back and forth sort of day. They tried making a run to the downside, that failed. They tried making a run to the upside. They got a little bit going, but then it failed too, before falling back down to the lows and then right back to the highs. Lots of back and forth, but we can see that the market is expanding. It's going to further highs, it's going to further lows. We're seeing them kind of test the waters on both sides, and a lot of times that will happen preemptively to a breakout. So seeing today open as a range, it does kind of make sense, but at the same time, in the back of your mind, you're thinking, well, there might be a breakout at some point today, just given that we know the market is attempting to expand a little bit. We open up this morning with a very slow start. The first candle of the day is a doji, into a bear doji, into a bull doji, all inside each other, right? 3 inside bars back to back to back, all kind of stacking up and telling us, man, we may need to be really careful this morning because this is not indicative of a good, strong breakout move. Doesn't look like they're ready to go yet. They tried making a run through the highs. They couldn't even make it to the high before we found the sellers push it right back down to the lows. Now, we were talking about this in the room in that there's a good chance that we're going to find buyers down here to be able to pick this move up and try to drive the market back higher, given the clue that we missed the highs and looking for a potential fade back into the move, and it worked out absolutely beautifully. So that's why there's an arrow down here, because that's one of them that we took in the room, and it was a beautiful opportunity to drive the market right back up for a quick snap higher. But then we started seeing a little bit of fluctuation in the market. The sellers were unable to carry it lower, and when they tried pulling back, they tried pushing it down, that failed. They tried pushing it down again, that also failed. We also noticed that the range was getting very, very small inside here, and that's letting you know, hey, even if there is an opportunity to try to take a sell as an example here to drive the market down, the risk reward, if you were going for a 1-to-1 risk reward as an example, the target's like 6 ticks. It's almost not even worth the hassle, right? So a lot of traders, when you run into that type of situation, they end up just sitting on hands. They don't want to take a trade if they can't at least get a minimum amount of a scalp, which in crude oil's case is usually about 10 ticks. We saw scalp distances of 5-6 ticks all morning. There just wasn't a whole lot of juice in the tank until we moved into the afternoon. We began forming a little bit of a top of a channel here, working its way down, and the bears still controlled the market. There wasn't really a huge clue that we were going to get a breakout until right about there, right? We had rising support potentially in the way. They were holding it relatively nicely. They started trying to crack underneath it. When the buyers tried proving those sellers as failures, the buyers failed, and it closed down again. And that's why there's a nice blue arrow here, because that is the confirmation that the buyers failed to trap the sellers in, and the sellers are swarming back into the market, which means that the buyers are now going to get trapped. And if the buyers are going to get trapped, where are we going? Well, probably to their stops. And there's going to be some stops below that last swing low, below the obvious low, below the major low. There's going to be stops all over the place, knowing that in this case, the sellers are obviously dominating the market. They want to take this thing further down, and they want to do it a little bit on the aggressive side, especially considering that the ranges are so small. We're anticipating a breakout at some point today, and a bunch of buyers are trapped, and that usually leads to a fairly strong breakout. Now, we had a beautiful breakout move to the downside. We saw a little bit of a bounce right there with the buyers trying to hold that prior swing low, still trying to fade it as though it were a range, and they couldn't even trigger the buyers in. They couldn't even go 1 tick above that candle's high, and it immediately dumped right back down to the lows. Now, that's why there's a blue arrow there. Normally, you want to avoid selling into the prior low of day, selling into possible channel lows. There are a couple red flags there, but in the context, we know that the buyers have been trying. They failed. They tried again. They failed. And now they're trying that sort of like the last-ditch effort, and they couldn't even continue 1 tick further up, and they failed again. Every buyer on the planet now is going to look at this and say, you know what? I need to get out of this. I don't want this anymore. And there are also going to be every seller on the planet that maybe missed this move that are going to be chasing it down, which equates to everybody being a seller. And that slams the market further down with a very strong bearish move going into the end of the day, directly into major support at 49.40 with a to-the-tick bounce off of that level before it turned right back up again into where we are now. And now we're just kind of fading back in. We have a bear channel overall. A bear channel breaking lower doesn't generally stick around very much. We're probably going to go into a range to finish off the week. And considering that today is, non-farm payroll, we have a bunch of FOMC stuff going on, not really a big surprise to see us slow down a lot going into the afternoon. Most of the traders already made their money this morning. So overall, beautiful downside breakout move, but with a little bit of fluctuation to start the morning off, a little bit of confusion, probably trapped a lot of people. So there's a lot of good learning opportunities in here to decipher what's going on so that we can approach tomorrow, or in this case, Tuesday, with Monday being Columbus Day, approach Tuesday with a fresh plate and a fresh approach so that we can trade it accordingly. So that's going to do it for this one. Make sure to swing on over to slingshotfutures.com. We point out all of these levels of support and resistance, which we can see work pretty darn well most of the time, every single morning before you start your trading day. And it's a great way to start the day off for your morning routine. If you have any questions about any of this, you can always send me an email, jbrink@slingshotfutures.com. And until Tuesday, enjoy the weekend, and we will talk to you all later.